Hello and welcome to Business Incorporated. It's a midweek trade and markets are buzzing right now. Here's what's coming up. Big money moves today. The Debt Management Office is kicking off 2026 with its first NTB auction, offering a whopping 1.15 trillion naira across maturities. And Ghana's inflation slows for the 12th straight month in December, signaling easing prices and a boost for consumers and businesses. And Africa's startup funding is back, and the numbers are bigger than many expected. It's great to have you join us. I'm Ladi Williams. Let's kick off with what's playing out with the markets that we track now. Starting with the metals market, we've seen gold prices ease today. Yeah, it's red all over there. Spot gold 0.47%, $4,474 per ounce. And we see spot silver pulling back. The biggest drop we have, that's platinum. This has moved a lot. If you're going to throw back into 2025, $2,279 per ounce there. Platinum is down 6.60%. Palladium, 4.20% down. And see copper, 0.97%. So it's red on the screen for most of the metals. And definitely, with big gains, definitely we have some profit taking and pullbacks. And investors are watching out what's playing out in Venezuela and the U.S. there. And definitely that's driving sentiment in the metals market there. We did get some direction from President Trump there. Talking about barrels of oil coming from Venezuela to the U.S. So that's driving sentiment in the metals market. And talking about the oil market, we're also seeing pressure right there. Oil prices slid today after President Trump did mention how much barrels will be coming from Venezuela to the U.S. You know how the U.S. They like that thick crude, coming from Venezuela, down 1.02%, managing to hold $60. That's for Brent crude a barrel there. This might not hold at this point. We're looking at sub 60 at this rate. Big 1.35% drop for WTI crude, $56.37 a barrel. So that's the picture right there in the oil market this afternoon. All right. Let's get a check on other matters now. Talking about funding, we see there's a powerful snapshot of 2025 investment landscape. According to the latest Africa, the Big Deal Year in Review, startups on the continent, they raised an impressive $3.2 billion in funding, outpacing that's 2024 and 2023. That's according to their data there, $3.2 billion. That was raised higher, about 40% higher than 2024. Then startups hitting key funding thresholds. We see 500 startups raise over $100,000. 215 startups raised over $1 million, up 11% from 2024. Then we see 69 startups raise over $10 million, up 73% from 2024. Then 8 startups raised over $100 million. And for the big 4 country contributor, we see South Africa leading there. $344 million raised, 25% of the total raise we saw in Africa. Egypt, that comes in second there, $339 million. Kenya, $227. And we have Nigeria there, $176 million, about 13% of the total raise for H1 2025. So that's the picture right there for startup raises in 2025. All right, let's head over to the fixed income market. We see the Debt Management Office kicking off 2026 with its first Treasury bill auction today, offering 1.15 trillion naira across 3 tenors. Investors can participate in 150 billion naira 91-day, 200 billion naira for the 182-day, and 800 billion for the 364-day bills as Nigeria's debt markets kicks off 2026 this year. All right, to other parts of Africa now. We see Kenya's economy is picking up the pace. The latest report from the National Bureau, that's the National Bureau of Statistics right there in Kenya, shows growth of 4.9% in the third quarter of 2025, outperforming the previous year. This momentum was powered by a massive rebound in mining and a 16% surge in cement consumption within the construction sector. Agriculture, that held steady in Kenya, thanks to a boom in milk production and flour exports. Yeah, so that's a picture there for economic growth in Kenya. That's for the third quarter. And talking about macros now, we see for Ghana, fantastic story. Looking at the macro side of things for Ghana, and they're kicking off with good story, but still from 2025, the inflation has slowed. That's in Ghana to 5.4% year on year, the slowest pace in years. This marks the 12th consecutive month of falling consumer prices, according to the country's statistics service. Economists say the easing inflation is helping, stabilize cost of living in the country, but challenges remain as the government and central bank continue to manage price pressures in the economy. The latest figures give hope for sustained economic stability heading into 2026. All right, to other matters now in South Africa, as tariff negotiations between South Africa and the United States of America continue. Minister of Trade and Industry, Pak Tao, says the country will submit a revised trade offer. The offer will address some of the concerns raised by the U.S. in their previous report. In August 2025, the U.S. imposed tariffs to countries with SA receiving 30% increase in exports. Since then, South Africa has been trying to strike a deal with the White House. Take a listen to how it's played out so far. What's going on now?
It has approved that South Africa submits a revised offer as a basis for negotiations with the U.S. The new offer builds on the previous offer submitted in May 2025. The new offer substantively responds to the issues the U.S. has raised in the 2025 National Trade Estimates Report. South Africa has already addressed sanitary and phytosanitary measures in compliance with the biosecurity protocols affecting poultry. In this regard, South Africa granted market access under the conditional self-ban and self-lifting system. This will ensure that the U.S. is able to leverage the tariff rate quota of 72,000 tons already agreed in 2026.
So it's time to, get all the crystal balls out and find out what to expect for Nigeria's economy. We've got a couple of forecasts, come out so far from Central Bank of Nigeria to other investment houses. But today, we're going to drill down on Cardinal Stone's latest outlook for 2026, what they're seeing for the economy, what they're seeing for inflation, the Naira, and other macros right here. Joining me for this conversation, we have Baboye Olaolu, who is the lead economist, fixed income strategist at Cardinal Stone. Great to have you on the show.
Thank you for having me.
Last time I saw you, I'm not sure if it was 2025, but I think it was around then.
Yeah.
It's great to have you again. And, definitely, I know the crystal ball is out right now. You have, churned out what we should expect, this year. We're seeing for nominal GDP 2026 full year about 507 trillion naira. That's about $362 billion. Inflation outlook estimated to fall below the long-run average of 14%. CBN inflation target projected to dip below the 16% target. So it's looking quite good.
Yeah.
So talk to me about what you've seen, what you're expecting so far in 2026.
Okay, first, I think that 2026, or starting from 2025 down to 2026, looks so much like 2019, when we had good stability from macroeconomic perspective, be it growth, inflation, effects. We're gradually moving into that same territory again, right? The pressure that we've seen in the last 3 years, stemming from the reforms that the government did, are kind of waning, and we're beginning to see the benefits. So what we did, for example, was to break down the economic components, looking at the government, the businesses, and the individuals. For example, from the business perspective, if you go back to 2023 and 2024, and you do an average of business profitability using the NGX 30 as a guide, or you decide to look at their performances, what you will see is that quite a number of businesses, especially non-banks, they were reporting material FX losses. A few number of them were negative, and a few number of them even had their shareholders' position moving into the negative position. But what we're seeing at the moment is that there is a material recovery, both in profitability, FX improvement has led to improved stability for businesses. Now, when you move to the consumer perspective and you try to look at how consumers are fared, what they expect, because of elevated inflation, because of stressed macroeconomic condition that we saw in the last 2 years, right, it weakened consumer wallets. What we're saying now is that there is an improvement in consumer wallets, right? And that is bringing us a bit of confidence for consumers. So generally, the story is looking pretty much great for Nigeria, both from almost all major macroeconomic indicators.
Yeah, and another quite interesting one, some of the multinationals that were reporting that they would leave the country or change their business model with the country. We're seeing some of them starting to have a rethink.
Yeah.
At this point and say, you know what, maybe we can, give this market another try. What are you seeing there?
So most of those businesses that planned to leave, and even those that left, many of them left largely because of FX, right, and because of the stressed macroeconomic condition. Last year, in 2025, FX reported the first gain in over 14 years. And this year, we think that there's legroom for FX to get to about 1,004 levels, right, from the 1,420 plus that we have at the moment, right? And that has supported a few number of businesses to start rethinking, like PZ. And we think that even for more companies, perhaps that we are not hearing in the news, are most likely rethinking Nigeria. From our engagements to foreign investors, both individual investors and corporates, they are bullish on Nigeria even much more than we, the citizen, because this is perhaps one of the best times that you can invest in Nigeria. From a macroeconomic perspective, from a market perspective, everything looks solid and everything looks great.
All right, let's look at monetary and fiscal policy now. Anticipated cumulative cut of about 300 to 400 basis points. I'm thinking that's for the whole of 2026. So
that's correct.
That's quite big. 300, 400 basis points. Short-term yields expected to range between 18 to 20%.
Yeah.
2026 budget deficit forecast at 15 trillion naira. An oil price benchmark estimated average of $55 per barrel. So much attention on oil right now. We're even seeing pressure right there in the market with President Trump saying, expecting barrels of oil, from Venezuela to the U.S. So talk to me about, what you're seeing that will play out when it comes to monetary policy. We only had one cut in 2025.
Yes, that's correct. Yeah, we think that there will be a 300 basis point rate cut next year. For one, inflation
That's this year.
This year,
yeah.
Sorry. Inflation is expected to moderate below the long-run average, like you pointed out earlier. One, if you look at what energy prices are saying, we expect energy prices to remain relatively stable, right? The World Bank, the IMF did an analysis on Nigeria, a 40-year analysis, to look at the key drivers of Nigeria. And the drivers were put in different buckets. Number one, money supply is the biggest driver of inflation in Nigeria over the last few years, right? More than 50% of inflation driver is influenced by money supply. About 25% is influenced by FX, and then you have an additional 25%, which is influenced by multiplicities of idiosyncratic factors. If you look at the pace of growth in money supply, currently is around slightly above double digits, around 10%, 11%, compared to almost over 40%, 30% that we had about 2 years ago. When you come to FX, which is a major part, FX currently is relatively stable and the outlook is positive. That has supported the downward trend in inflation. Although base effects also accelerated the pace of moderation, the statistical adjustment, that is the CBI rebasing, also aided the pace of moderation. We think that moderation will continue next year. We're going to see inflation below 13%. At current levels of MPR, we think to support the likes of manufacturing businesses and sectors that are sensitive to interest rates that have largely been pressured in the last few years, we think that interest rate at this level is too elevated. So we are looking at about 300 basis points cuts. Most of these cuts will start from our own estimate from May, right, the May meeting, down to the rest meeting of the year. That's where we think that most of these rate cuts will start from. Then from the fiscal side of things, after we did our own analysis, we like the way the whole dynamics is, but we are not too confident from the fiscal side of things. And that's because when you look at what government has estimated in terms of budget deficits for next year, they are projecting around 28 trillion. That is the highest on record. We think that it will not get to that level, similar to what they did last year, where some of the capex for 2025 was moved into 2026. We're likely going to see something similar play out again this year. Capex cuts, capex reduction. We think that they'll be doing a deficit of around 15 trillion, right? And this elevated deficits will mean more borrowings, both in domestic markets and international markets. So we are a bit concerned because debt levels are jumping. If you look at debt levels organically, right, not compared to debt to GDP numbers, debt could move close to 180 trillion by the end of this year. When you look at it on the debt to GDP levels, it's moderating because the GDP is growing faster than debt numbers. But we've said this in the past. GDP don't service your debt. GDP don't pay your debt. You need strong revenue. And debt servicing to revenue is around 60% to 70%, which is still pretty much elevated. So we are a bit concerned in terms of the way the debt levels are jumping, right? But in terms of debt sustainability, if there is risk of debt default, similar to what happened to Ghana and a few other African countries, at the moment, the risk of debt default is very moderate. One, debt to GDP is low. Two, when you look at Nigerian short-term debt as a percentage of the FX reserve, external, right, is over 100% beyond the benchmark that has been set by the IMF. When you look at the duration of the Nigerian state, in terms of the maturity, most of it are majorly short-term debts, medium to long-term debts, which means the risk of a short-term crisis is not there. But we think that government needs to do something fast in terms of the level of debt jumping that we're seeing.
It's quite interesting. We see the likes of Ethiopia exploring a new, debt restructuring, model there where they're not just going to say, oh, forgive us our debts, let's, bench it to the economy. If the economy makes money, you make money. If the economy doesn't make money, then we share the risk. I did read about that, yesterday. But, looking at our forex reserves now, 7-year high. Yeah. And I would expect you still see it going higher. That's for the FX reserves there, $45 billion. Do you think, as we're in a pre-election year, at this point, everyone expects volatility, for the Naira. Do you think this is enough buffer for the Naira?
So it's good to point this out before I come to FX reserves. You need to judge what has happened historically. How does the FX and the entire FX market, how do they react during pre-election years? Now, we discovered that since the Nigeria got, since we moved to, we left the military rule and we came to the civilian government, what we've been saying is that FX typically will react more to what the economy is saying, to how the economy is performing, rather than election. If you weigh it on the balance, they will place more emphasis on how the economy is performing. I'll give you an example. In 2019, when we were moving, when we had the 2019 election, right? We had an election during that period. Despite the fact that there was election, we saw Naira being relatively stable. Why? Because that was when the CBN created the I&E window. That led to a more market-reflective exchange rate. Now, what we are seeing at the moment, that's why I said it looks so much like 2019. What we are seeing at the moment is there's a lot of confidence in the FX markets. We saw FPI inflows and even the FDI inflows touch the highest level last year in over so many years, right? Why we're not back at the levels we used to be maybe in 2003, 2004, when we started the heavy reforms that was done by the Obasanjo government. We strongly believe that the investors or foreign flows and the way FX will be a function of how the economy will behave. And during the last election, that was when we had a new president coming. This time, the incumbent power is there. We don't know how the election will turn out, right, with the way the things are. But during the first time that the president is coming in, there's always more volatility compared to the second time, because the general expectation is that if the president is doing well, maybe the president will be able to secure the second term, which is something that might also play out depending on how the people think and who they want to vote for. But we strongly believe that FX will be stable. We are looking at the reserves getting to $50 billion level by the end of this year. Why? If you look at what the current account numbers are saying, current account surplus at the moment is going to touch $17 billion by the end of last year. We think that we're going to see another $17 billion this year. And that's because we are beginning to see new exports. Gas is there, refined products. Currently, both of them account for close to 45% of oil-related exports. So we think all this will support the FX reserve, boost liquidity, and keep the Naira pretty much stable.
Fantastic. Well, we'll keep exploring because there's so much, to look out for in 2026. Oh, thank you so much, Baboye. Olaolu is a lead economist, fixed income strategist at Cardinal Stone. Thank you for, showing us your crystal ball and what to expect, this year. Thank you so much.
Thank you so much for having me.
All right, so for the markets now, we see the NGX, 160,246 points. At the last time we took that number up 0.18%. So I guess it's getting more comfortable in this 160K level. Stocks across Africa, showing, mixed sentiments. For the Johannesburg Stock Exchange, 0.56%, down 118,000 points. Let's flip over to other markets that we track now. We see the EJX30 looking really strong, 2.13%, up 41,543 points. Let's flip over to the Gulf region now. It's also a good picture. Right there, 0.71%, 0.24% for the Abu Dhabi index. All right, let's find out what's playing out in Europe now. We have Lars Holt joining me there. Great to have you, Lars. What's the picture right there in the markets in Europe? All right, we'll try and get Lars back, but definitely looking at markets across, that's the U.S. Looking at stock futures. We see the stock futures also, trying to kick off, in the green there after the S&P 500 and the Dow Jones Industrial Average notch, fresh record high. We're seeing flat movements right there for stock futures in the U.S. But let's get a picture of what's playing out in Europe now. I believe we have Lars now. Great to have you, Lars. How's it looking?
Yeah, good to be with you, Ladi. How are you? European markets here, I got to tell you, are indeed mixed today, with markets being down in London, in Paris, and in Madrid. There are no steep losses, just a few tenths of a percent here and there, but they are not all down. Frankfurt is up, where the DAX actually is not only in the green, but it actually climbed over 25,000 points for the first time ever. So we're looking at a new record high today. Now, why is that? Well, there's strength, obviously, still in defense stocks like we discussed before. There's also some good news out of the retail sector. And then maybe that's the most important point. Some traders are saying that there's a bit of anxiety among investors. They're sensing a rally coming up. They don't want to miss out. So there might actually be a few more points up in the pipeline.
All right, I guess it's FOMO at this point. But we see Berlin has been hit by a massive power outage, reported earlier in the week. Meanwhile, it seems power has been restored. What are the latest developments there?
Yes, it's exactly right, Ladi. Power has been restored, including actually to my house, although it is still cold. Of course, I guess it's going to take a little time to heat up the house after everything had cooled off to almost freezing temperatures. Anyway, this massive power outage, like we said earlier in the week, was caused by an arson attack committed by left-wing extremists. Their aim was to sabotage the fossil fuel industry. They did, after all, attack a gas-fired power plant. There was initially some talk that indeed Russia might play a role in this attack as well. However, the German government has now ruled that out and says it does not seem like any foreign actors have been involved at all. Now, like I said, power is back. People are moving back into their homes. Around 100,000 Berliners had been affected, and many had to leave their houses and apartments as there was no heat. After all, we're in the midst of the harshest cold front that we've seen in a while, actually.
All right, I'm so happy you have light now, Lars. But what impact does this all have on, business in the area?
Yeah, Ladi, there are no precise numbers out at this point, but it's clear already that this massive power outage has cost businesses in the area millions of euros. The power outage did not, in fact, hit a particularly industrial area at all. The affected districts are mostly residential. But that actually means that those 3,000 businesses that were actually affected were pretty much all small business, and those are usually not equipped with emergency backup. So many stores had to close for days. Many grocery stores also lost tons of product with fridges out and such. Some actually donated food to shelters before it would perish, so that's good, of course, but the financial damage had already been done. Also, there were many offices closed, or craftsmen that couldn't work, restaurants and hotels that couldn't have any guests. Local authorities are saying this all will definitely cost the local economy many millions of euros.
Yeah, definitely. We don't like power outages. Thank you so much, Lars, for the details. We'll keep tracking and see how it develops. Thank you.
Definitely. Thank you, Ladi.
I'm just going to check on what's playing out in the crypto market now. I'm looking at some of the top headlines. You see the UAE RAK Bank, they've received an approval in principle from the Central Bank of the UAE to issue an AED-backed stablecoin subject to the completion of regulatory and operational requirements. Further updates on the pilot phase and potential expansion will be shared in due course, subject to regulatory approvals. According to the press release, this is part of Iraq Bank's digital assets journey and its commitments to align with the UAE's digital economy framework. Then we see Senator Cynthia Lummis has raised concerns about U.S. government agencies continuing to liquidate the Bitcoin, despite presidential directives to preserve these assets. The senator questioned why agencies are selling Bitcoin when President Trump explicitly ordered the forfeited cryptocurrency be retained for strategic Bitcoin reserve. A report reveals the U.S. Marshal Service appears to have sold $6.3 million worth of Bitcoin that Samurai Wallet developers Keon Rodriguez and William Lonergan Hill paid as part of their guilty plea agreement. Then we see Ripple. They've dismissed the IPO talks there. There's a leadership. They've once again confirmed that blockchain payments firm has no plans to go for an initial public offering, even as recent speculation suggested otherwise. According to them, currently they plan to remain private, and that's according to Ripple President Monica Long, as she told reporters earlier. So definitely we're seeing a pullback right there when it comes to Bitcoin and most of the altcoins at this time. So the markets are kind of mixed, at this point. Looking at Bitcoin, they're giving up 1.93%, $92,000. Ethereum, 0.69%. So we're seeing a pullback from the recent run we saw for most of the markets there. So that's the picture right there. We'll bring you more updates on what's playing out with the markets tomorrow. Still geopolitics driving sentiment right now. Thank you for watching Business Incorporated. I'm Lade Williams from the team right here at Channel Bye for now.